Wall Street hit another high today. But did you know that it was concentrated in just 5 companies? And if you don't have those 5 companies in your portfolio, you're not participating anywhere near the gains that we've been hearing on Wall Street. So which 5 companies are there? And what other hot industries should you be leaning into for 2024 and 2025? And are there other Wall Street secrets that you need to know to be the boss of your money and to compound gains and step off the Wall Street roller coaster? We did see almost 20% losses in the S&P in 2022, and then a 26% total return in 2023. So that's a bit of a roller coaster. However, there are tricks that can help us to manage this, and it's not day trading, and it doesn't require taking on an extra job. In fact, it's the life math that we all should have received in high school, and it's literally easy as a pie chart. So we'll talk about all that and more in today's video conference. Again, this is Natalie Pace. You can always watch these back at youtube.com/Natalie Pace. And if you want to join us live, email info@nataliepace.com with videocon in the subject line. Be sure to subscribe. You know how to do that. That way you know when I have a new video conference that comes up. I do free video conferences at least once a month. Thanks again, and we'll get started in just a moment. So again, we're going to be talking about how you can get hot and actually participate in the extraordinary gains that we're hearing about on Wall Street. Again, I look at a lot of portfolios. I do a lot of unbiased second opinions. I'm on the education side. I don't manage your money. I educate you. And I have seen so many people who are not anywhere close to the extraordinary gains that we're seeing on Wall Street. And the main reason is that they do not have large cap growth, artificial intelligence, breakthrough technology, or some of the other hots that we're going to be mentioning in today's video conference. So the first thing I want to show you is that I have a blog that recaps everything that we're going to be talking about today. So it's a good idea for you guys to look at that on the video conference itself. On youtube.com/Natalie Pace. I always have links to these, but you can go to nataliepace.com/blog or nataliepace.com and just look for the blog in the menu there. And then it always is the first one, whatever is the most recent one, at the end of it, I always put a list of the other recent blogs. So in fact, even a lot of the blogs that I reference are listed here, like the Fantastic Five or gold or Tesla, Bitcoin, a lot of these copper, again, they're in this list here. So you'll be able to link to them as well. So we're going to get started by talking about artificial intelligence. And one of the things that I wanted to show you is what we've been talking about, which is that if you didn't own the Fantastic Five, your portfolio isn't performing anywhere close to what Wall Street gains that you're hearing about. Nowhere near. You have to have the Fantastic Five, which is really propelling up, and they're all large cap growth stocks, and they're highly concentrated in technology. So if we take a look at the performance of each one of these companies compared to the Dow Jones Industrial Average, which is, what we all hear about when we hear about stocks. This is Microsoft over the 5-year period compared to the Dow. Look at the difference in the returns. This is Apple. This is Amazon. This is Google. This is NVIDIA. So as you can see, NVIDIA's returns make it look like there were no returns at all in the Dow Jones Industrial Average. Now, the interesting thing here is that this is all what we would consider breakthrough technology. So if you wanted to add a little heat to your portfolio, and in fact, it's something we talk about, and we have been talking about in our financial freedom retreats for years, there is an ETF that focuses on breakthrough technology. It's the iShares TECB, Tech B. That's a good one. Now, the interesting thing is that the artificial intelligence ETF, which is IRBO, hasn't performed as spectacularly as the Tech B one. And the large reason for that is that it's these five very, very, very large companies, most of which are buying back their own stock. And that's part of the reason why they're pushing up all these stocks that are responsible. So that IRBO has some artificial intelligence companies that are, in fact, much smaller. So if you had the Tech B plan, the ETF, you're performing a little bit better than if you were doing the IRBO. Now, the IRBO, as you can see, it is trading close to its 52-week high, but it is not anywhere close to its 5-year high. Whereas if we look at Tech B, because this has a lot of those fantastic five that I just talked about, it is near its 52-week high and its all-time high. So that's an important distinction. So again, in our diversified plan, of course, you always want to be age appropriate, keep a percent equal to your age safe. Overweight right now safe because we have so many economic headwinds that could happen. And then you want to diversify. Now, in our diversified plan, we have small cap, mid cap, large cap, value and growth, and 4 HOTS. When I do my second opinions, most people just have large caps. Many times they're very concentrated in value and not growth, so they wouldn't be participating anywhere close to the gains that we're seeing on Wall Street, which are pushed up by the Fantastic Five, which have all more than doubled. Right? So you need to have the large cap growth. And I would say you want to lean into breakthrough technology in at least one of the HOTS. Now, we're also going to talk about, again, this is just a video conference to kind of go over this, each one of these areas. Just know that if you do want to dive in deeper, go to that blog or join us at our June retreat. We're having one June 8th through the 10th. And, you'll learn how to save thousands annually. You'll also learn how to earn a lot more money while you sleep by adding in HOTS and growth and even some country diversification. So it is definitely something that will put you on the path for financial freedom. Absolutely. Just email info@nataliepace.com. So I can't teach you in 20 minutes what I can teach you in 3 days, and we'll go over a lot more of it there. But back to this AI blog, I also said that gold and copper are on fire. And in fact, Sunpower became a meme stock and it doubled in just a couple of days. So what is going on with copper? And again, I have a little link here. If you just click on the blue highlighted link, you can link over to the copper art blog that I did recently, and that's going to give you a lot more information. But the cliff notes are that copper is essential to all things clean energy, right? It is one of the best conductors of electricity. With the artificial intelligence that we're seeing, the increased amount of energy that is needed, electricity specifically, that is needed for all of these AI and data centers, copper is essential. And we're seeing that copper prices are very close to their 5-year high. And we're seeing that that is actually benefiting the copper mining stocks, but it is also benefiting the countries that are rich in copper. Now, we have been leaning into Peru because it is a country that's rich in copper that also has private copper mining companies. The top producer of copper is Chile, but those are all nationalized copper. So we have leaned more into Peru, and that adds a little bit of country diversification. But there's another thing that adding in Peru can do for your portfolio. A lot of times with the value funds in the United States, the amount of dividend that you're getting is actually pretty low. It might be under 2%. But here you can see that the yield you're getting is 3.3. So it's a little bit more, but also look at this performance over the past 5 years and even just over the past year, right? Since less than a year, it was at 30 and it's now at 43. So this is something that you can add to add heat to your portfolio. And again, the reason that we suggest funds instead of individual companies is that there's a lot of volatility on Wall Street. I want to remind you that stocks lost 20% in 2022, and then they gained 26% total return in 2023. So if you're not properly diversified and rebalancing once, twice, or three times a year, you can just be riding this roller coaster. Okay. So by rebalancing, and when a slice gets smaller, buying more at a lower price, when a slice gets bigger, capturing gains at the high price. So right now might be a really decent time. And if you had Peru and now you have a slice and a half, maybe you would go ahead and sell half of that slice and trim it back to one. Now, why would you do that if copper prices are at an all-time high and maybe they can go higher? The reason is copper is called Dr. Copper. Now, on one hand, Goldman Sachs says copper is the new oil. It's so essential for the clean energy revolution that this is something a lot of us should have exposure to, right? And again, you're going to have to do that in a hot slice, and we do it by adding Peru as our hot slice. But on the other hand, it's called Dr. Copper. And the reason for that is that if we hit a recession, copper is the first one to have prices go south because everybody stops their spending when we hit recessions. So copper prices can be volatile. They may be in super high demand now, but if we hit a recession, then the demand can completely vanish. We've seen that happen in almost every recession. So that's why it's important to go ahead and capture your gains. Even if you just look at that EPU ETF, you can see how volatile this particular fund has been, right? And if you're not capturing gains, you are higher than you might have been at any other time that you purchased it. But again, if you are capturing your gains every year and you see a slice that's gone to two slices and taking the gains, then if it goes back down and one slice is now only half a slice, buy low. And again, the pie chart system that we use with the rebalancing, it is prompting you to do what you should do, to buy low at a lower price and to sell high and capture gains and always be properly diversified. Okay, so back to our blog that we're looking at. Another big hot has been gold, and even more hot has been silver. Now, these are hedges against inflation, and also if stocks head south, they can be a hedge against stocks heading south. They're not heading south, right? So why are gold and silver going up? And a lot of that, believe it or not, has to do with China and Russia and that BRICS currency. So China and Russia, it's still a very, very small amount. I mean, really the only countries that are using it are the BRICS countries: Brazil, Russia, India, China, and South America. And it's unlikely that in the near term or even the midterm that this is going to be a major threat to the dollar. Of course, they would like for it to be. But what they're trying to do is to make it more attractive, is to back the yuan by gold. So we are seeing gold purchases by China. Russia had to sell a little bit over the last year, but that's probably to help fund their war. So this can be good. Now, why do I mention silver? Because when gold rises, typically silver does too. Now, in the last 10 years, that hasn't been the case, but that's abnormal. Gold stayed pretty high and silver is still down. It's like almost half of where it was. Its high is 47. It's trading in the 28 range. So I believe that there is more room to run on silver because gold's at its all-time high, whereas silver is nowhere close to it. So we're kind of leaning into maybe a silver trust like SLV with iShares. And the reason I mention iShares, it's owned by BlackRock, which is an AA minus rating. So you do want to make sure that whatever fund company you're buying from has a really good credit rating and is well capitalized. Crypto. Now, crypto rides a roller coaster, right? And recently, Bitcoin halved. And usually, when that happens, Bitcoin goes way up. Now, this is where Bitcoin is now. If we look at an all-time high, it's very close to its all-time high. It peaked at its all-time high before the halving. And as you can see, that was in March, right? And now it's actually down a little bit. But another thing that I want you to notice here is that Bitcoin is very volatile. So again, those people that are using our pie chart system and using Bitcoin as a hot slice, you know, when Bitcoin shoots the moon, it goes crazy high. You might have one slice that becomes 10 slices. And in that case, sell high and trim it back, because if you don't, the whales are going to slap you in the face and you're going to be in a crypto winter, and who knows how long it's going to be for. So it's pretty hard to go from 69,000 down to 15 and then back up to 70. That can be very hard on your financial wallet, right? But if you have it as a hot slice, if a slice goes to 10 slices or even 6 slices, sell high, trim it back. And that way, if it goes back down to a sliver, you have that wealth, the liquidity, and the emotional fortitude to buy it low. Now, where do you buy it? Do you buy which ETF? Should you buy an ETF? Should you buy a coin? All of this is in actually another video conference that I did. If you need that exact link, email info@nataliepace.com and say, hey, I'd like to watch that crypto video conference. Also, you can just see it on the playlist for my live conferences. It was a couple of months ago. So I do encourage you to learn a lot more, and not just from your favorite cute influencer, okay? Definitely learn it from, I mean, I'm not saying that I'm like a crypto specialist, but our strategy for using it as a hot, and because I follow it and have been following it for a very long time, I do have experience there. I trade it myself. I know where I trade it. I know what some of the benefits of that new iShares Bitcoin ETF might be for you, when it might be a good idea to use it, etc. Okay. What else is hot? Let's go back to my blog. Okay, so what I did after I talked about the hots is I looked at some of the things that are not as hot. And we sometimes will name something as the company of the year. So in 2021, we saw spectacular growth in Moderna, no surprise, 26,000% year over year revenue growth. And we named it as the company of the year with about a share price of about 150. It immediately, within months, went over $450 a share. And we immediately said, hey, okay, this is really high, and now might be a good time to capture gains. And the reason that I mention this is that with a company that's an individual company, you have to babysit it. You can't just buy it and expect that it stays there forever. As you can see, if we go to, the Moderna share price, it's actually a little bit lower than where we listed it. And the prospects for it are nowhere near where they were pre-pandemic, right? Because now we're on the other side of the pandemic. And, so you would be a little bit down if you hadn't captured gains at 450. So for a lot of people, individual stocks are just not a great idea. So what could you do instead? If you're interested in biotechnology, then there is a biotechnology ETF. You might be more interested in hip replacement stuff, or, hospital beds, anything like that, like Stryker or some of those medical devices. There's actually an ETF for that. So again, having a fund means that you protect yourself from the volatility of one individual company. And it truly can be money while you sleep, because you're not managing the fund. You don't even know what all the companies are in there, but you can get targeted on the exact industry that you're interested in. So let's take a look at IBB, which is that biotech fund on iShares. And as you can see, we look at the 5-year high, it's trading pretty low. So if you think that biotechnology could heat up again, it's not trading super low, like the all-time high was closer to about 175, but it's much lower than it was then, right? And what we're suggesting is that if you want a hot that's trade mid or high, maybe try dollar cost averaging into it. And we talk about that a lot at the retreat as well. First thing, keep a percent equal to your age safe, decide whether or not you want to overweight safe. And then with that extra amount that you have at risk now that you're age appropriate and overweight is safe, diversify into 10 different funds. It's literally that easy. That will get you more diversified than a lot of portfolios are, which can be very concentrated in just large caps. So another one that people really liked a few years ago was cannabis, and cannabis has really seen problems. A lot of the companies are out of business. Other companies are trading like at just, so low. We haven't like all-time lows, right? And what we have seen is that the black market, even though there are only 4 states where cannabis is illegal in the United States, and of course it's completely legal in Canada, what we've seen is that the black market is thriving and legitimate companies not as much. Now, companies like Tilray are pivoting. So Tilray actually bought Shock Top from Anheuser-Busch. It bought a bunch of craft distilleries and breweries. So it's trying to expand there. It's actually got hemp-based health food products at Whole Foods. So it's trying to expand its offering. And it also has pharmaceutical, like medical marijuana, in addition to adult use things. So we are seeing that people just don't want to go to a dispensary and show their ID. They want to be anonymous. They would like to have their whatever adult use, thing that they're interested in, whether it's a gummy or a bud, they want it delivered to them. And when that happens, sadly, it's usually cheaper than if they visited the dispensary in the first place. So the real problem here is that, and we're not seeing a solution for that yet, except for those companies that are trying to now diversify their revenue stream so they're not solely reliant on it. So, and you can't really buy a cannabis ETF from somebody, from a large fund company, right? So be careful. You don't want to just Google cannabis ETF and buy it from I just started my fund yesterday.com. And so you have to be really careful about the fund companies because there's a real credit quality issue. When we had, a year ago, banks were failing, major banks were failing, right? So when that scenario happens and over half of the S&P 500 is at or near junk bond status, credit quality is really important. Clean energy. So with Sunpower and a lot of the solar companies, last year, even though homeowners could put rooftop solar, if you're living in a sunny state, the payback time would be 4 to 7 years. You could finance it through your solar company. You could get a 30% tax credit in the United States. You probably had great incentives anywhere, any other country in the world, because a lot of countries are really pushing clean energy. We saw solar have just struggle. We just saw it struggle. And that probably has a lot to do with high consumer debt, inflation, and other things. There's not inflation on solar panels, and you're definitely getting a great deal if you get a 30% credit on your taxes as well. And then people say, oh, well, I don't itemize. A tax credit works whether or not you itemize. So remember, if you are a homeowner, you plan to stay there for another 20, 25 years, and you're living in a sunny state, you can save literally thousands of dollars on your utility bill by going solar. So definitely think about that. Now, the other side of the equation is that we saw SunPower become a meme stock a few days ago. And that was because everybody decided they wanted to do a short squeeze and just give it to those hedge fund managers. And that happens, right? We do see companies, we saw it back in 2021 in spades. Now, the difference here is that GameStop and BlackBerry and Bed Bath & Beyond, the fundamentals behind them weren't great. Now, of course, if you're looking at the revenue and the debt and all of that, the solar companies last year didn't look that great. The prospects going forward are good. And SunPower was one company that narrowly averted bankruptcy. That's probably why it had so many such a short interest. Now, just a little aside, and we'll talk about it in more depth in another video conference, but a lot of companies are their debt, and instead of pushing them into bankruptcy, they are the people that they owe money to are finding ways not to have them actually declare bankruptcy, but to do a restructuring without doing that. So be careful. You know, in the past, you could short a stock that looked like it was going to have to declare bankruptcy. You could make a lot of money on it. Today's world, not as much, because there's a heavy incentive from the central bank not to do that right now. So key dates for our rebalancing. Again, rebalancing a diversified age-appropriate plan is one of the best things we can do. It's a way that we can moderate the volatility, you know, stocks losing 20% one year, gaining 26%, which is just a little bit above even, right? The next year. So that helps us to moderate that. And you might just say, oh, well, what about buy and hold? Well, that looks like it worked because we've been in what's called a secular bull market since 2009. But the truth is, normally we have recessions. Like, we didn't really have a recession in the pandemic because we printed up trillions of dollars. We don't do that normally. Now, the economy has proved to be very resilient, but a better strategy, because the recessions in today's world are absolutely devastating. So even in the pandemic, before we printed up those trillions of dollars, the S&P 500 lost 35% in 1 month. So in order to protect ourselves, always keep a percent equal to your age safe, overweight safe if you think there's a lot of economic storms on the horizon, and rebalance. So this is a great time. There is a Wall Street aphorism, sell in May and go away. And that's because at the end of the spring rally might be a great time to capture gains, right? It's not all or nothing. If you have a slice that's gotten a lot bigger than it should be, captured gains, trim it back to where it should be. Another great rebalancing time might be the end of September. I call it the back to school stock sales. And that's because September tends to be the worst performing month on Wall Street. And then if we have a Santa rally at the end of December, if you rebalance then, and again, if you see something that's gone crazy high, you can capture your gains then too. If you wanted to just do it once a year, maybe the end of April or the end of December, whatever would be working best for you personally. All right, I'm going to go ahead and stop it here. Let's see if we have any quick questions with those people that are on the call today. But I want to remind you that you can always watch these back at youtube.com/Natalie Pace. If you have a money challenge, a money question, a hot tip, we want to hear from you. info@nataliepace.com. It might be that we already have a blog that we can send over to you. It might be that we're going to use it for an upcoming blog or video conference. We can keep you anonymous if you would like. So please reach out to us. One last thing, I would love it if you join me on Instagram. And that is where I have my broadcast channel. That is where I do my daily money tips. So if you go to nataliepace.com, what you're going to see here is that there's a link to my Instagram. I am Natalie Wynn Pace. There, WYNNE. So please follow there. And again, be sure, and it's going to show up on your mobile phone. It doesn't show up on this one. Instagram is made for your mobile phone, but I do have a broadcast channel there. And you definitely want to subscribe to the broadcast channel, because that's where you're going to get the money tips and the alerts about these video conferences and other opportunities like the Mother's Day sweepstakes that we just had. Okay, you can also follow me on Facebook, Twitter, X, and LinkedIn. And of course, do follow me on Substack, because that's where the podcast, if you're someone who drives, maybe you want to listen to these things. All right. So thanks again for joining me. I'll see you in June for our June free video conference. If you have any ideas of what it is that you would like to talk about, email info@nataliepace.com. Thanks again.